my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month lead and tin. I'll start with the lead. It is comforting to see, even this week when prices have moved up so high, that the market is still, just about, still keeping within, or at least nearly within, the May to October 2020 bullish shift pitchfork. Prices had moved up from the support of the big old 50% Fibonacci line of February 2018 to March 2020 move back at 21.27, back at the middle of June, up through the middle time, currently 22.02, and out of the narrowing range formed over May and June in what had effectively become a descending triangle that had then morphed into a bullish halfway hesitation. This led to a move higher over the May high at 22.58 and the October 2018 high at 22.62. Then, starting at the beginning of July, the market started to have contradictory actions, day after day, usually indicative of pretty heavy indecision. This indecision was channeled into forming an ascending triangle over July. 2 weeks ago, we had a potential seminal moment with a weekly key reversal up as the triangle came to a cusp. Initially, it looked like a false break lower, but as prices stormed up 2 weeks ago and broke up clear of the downtrend trend line from late June, which is currently at 23.34, targets started to be reached on the top side. Now, back in June, I laid out my thoughts on the action from the mid-April being a possible very large bull flag stroke halfway hesitation. Thus, I'd placed the target X1 in the 23.71 area to give a conservative target for such a pattern. I'd also mentioned back in June, maybe even earlier, of another possible pattern. Now, this other pattern was for a bullish cup with handle pattern. You see, the action over late February looked promising and suitable for such a pattern. I was confident enough then to leave target X in the 23.51 area. Those were the opportunities on the upside. Then 2 weeks ago, target X for the bullish cup and handle pattern in the 23.51 area and target X1 for the bull flag and halfway hesitation in the 23.71 area. Both were satisfyingly achieved. Finally, we have the very recent descending triangle. It was broken in between my comments, so I could not give an idea of it, of A, which way it was on the move, and B, how much it should move by, because the measurement had to be taken from the break of the trend line. I can only confirm the move higher had already reached this potential target topside in the 22.75 area after I came back. And this sometimes happens when a move is so fast. So basically, all bullish pattern targets have been achieved. So what now? Well, I postulated last week, and I quote, "We seem to be having some topping action going on as prices come back off after reaching all targets on the upside. Certain symmetry there, I think," end of quote. However, that has not been the case. Prices have continued to rise, such that we're starting to spend a lot of the time over the upper time. This market is still overall bullish. As I stated back at the start of this and earlier commentaries, we are still mostly within the May to October 2020 bullish shift pitchfork. Until that is broken on the upside properly, it is not viable for me to mention further targets on the top side. However, I could lay out some resistances that would need to be overcome on the way up there. The first we have already challenged, the 50% Fibonacci and the big old 2010-2011 move at 23.78. This is what is causing the swinging movements over the last 2 weeks. Then there's a small congestion area overhead between 24.43 and 24.50. I've nothing beyond that until the 25.08 congestion area. Those are the numbers to look out for on the top side. Just still keep an eye on it in case it does start pulling back in again. LME 3-month tin. I've been repeating here for weeks that the overall bullish incentive is still alive and strong here. This is because the original move back up, which started some 21 weeks ago, and then translated to a higher level some 14 weeks ago when prices moved up over the middle time, which is currently 32.315, and reached up towards the upper time, currently 34.695, the January to March bullish shift pitchfork. This bullish pitchfork has driven prices higher all this while. 2 weeks ago, prices reached up and pierced the upper tie on the Friday. This move higher, though setting new all-time highs over the last 2 weeks, also highlighted some indecision within the market, as in this might just be a little bit too much on the upside. Last week and even this week we've had immediate countering patterns indicative of intraday indecision. Now we've had indecision before, as recently as early 2 weeks ago, in a congestion around the 33,450 to 33,475 area, and it looked like we might stall. However, the same bullish shift pitchfork that had managed to move prices up from the 23,000 area back in March pushed the market through it. However, today, this time, not so much. We're currently testing the boundaries of the June to date bull channel, currently at 34,280 up to 35,910. Not on its own worrisome, but with some countering moves, it starts to stir the antennae on the possible fragility of this most recent move higher. Overall, as I've said last week and the week before, till this pitchfork is broken or amended, then it will still govern the bullish incentive. Bullish shift pitchfork is still the one thing this market has to deal with, in whichever fashion, and prices can drop quite a way before they break this pitchfork. That doesn't preclude us from looking out for early signals, such as have already been mentioned. That's the problem when you see the market rely so much on one pattern. It can be hellish when it breaks. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.